Welcome, it's denome. In today's video, we're gonna explore the new blockchain called Arc. And this is built for stablecoin finance by Circle. And Circle you already know from USDC. So $74 billion worth of USDC has been minted, and the company behind USDC is obviously Circle. So now they are releasing their own blockchain here, and I see a lot of good things about this, but unfortunately, I see a lot of red flags with this blockchain as well. So let me explain what this actually is and what its main purpose will be, and then I will go into the speculation of why it actually could become bad, because I see this as basically sucking liquidity from our normal crypto blockchains like Ethereum and Solana. And this will, by the way, release in 2026. So just keep that in mind. But now let me show you what they say this will basically fix. So they say that traditional financial systems have struggled with fragmentation, opacity, and limited access. And I don't know if that's actually a real problem, but that's what they cite as a problem. But the big fixes here is basically these four. So these are the complaints that they have heard from their customers, that we need predictable fees that we can play around. Our treasury team cannot hold volatile crypto assets to pay gas fees. We can't move sensitive payment data on public rails. Who do we call if we need help with something? And these four problems basically the Arc platform or blockchain is going to fix. Now, this whole blockchain is basically laser focused on stablecoin finance. So anything to do with stablecoins, you would go to Arc blockchain. So it's open layer 1 blockchain designated designed from the ground up to serve the next era of stablecoin native applications built by Circle. So USDC would be the native gas token for this. They have a built-in foreign exchange engine, instant finality, opt-in privacy, and full Circle platform integration. Now, I do have a lot of gripes with this particular blockchain here. I will also talk about the opportunity, but let me tell you about a couple of the gripes I have. They say opt-in privacy, so you can shield balances and transactions, so users and enterprises can stay compliant with their own obligations. So what I believe they will actually do here is they will allow full privacy for institutions. But if you are a normal person, then obviously you will have zero privacy. Because if you want to be a compliant in 2026 and onwards, you basically have to dox every single user. So countries and alliances and global institutions can basically have complete surveillance of people, but institutions can enjoy privacy and obviously big whales and so on. So this would become the home for all forms of digital money and tokenized value. So real world assets could also hop into this blockchain, as well as you could even have digital money, which could mean that Bitcoin and Ethereum can be bridged over to Arc as well. But the issue I see with this, the Trojan horse basically, is that if a lot of capital and institutions start using Arc, so that they can use USDC as a native gas token, that could suck a lot of liquidity out of Ethereum and Solana and other blockchains that we use on a daily basis. And if institutions go here, then or countries go here, then that basically allows them to close doors for decentralized finance completely. So that this is the only compliant blockchain that you are allowed to use. I can easily see how this can happen. And when we take a look at Circle and their USDC, you can see the absolute growth of USDC from $24 billion worth of USDC to now $74 billion of USDC. So there's a lot of demand for USDC, and this stablecoin growth is basically one of the only growth indicators we have in crypto since basically the bear market lows. We haven't seen decentralized finance have almost any adoption at all in the general population. We're not seeing more and more people joining crypto and using crypto on a daily basis. What we are instead seeing is institutions are trying to tap into crypto as much as they can, throwing in real world assets, doing digital euro, digital dollar stablecoin dealings. That's basically the adoption that we're currently seeing with crypto. And even if we take a look at USDC, which is the Circle's euro stablecoin, you can see even this has grown from $36 million to now $250 million. So uh, this is basically the future of crypto. Even though I don't want it, what I had wanted from crypto is a decentralized future, but that doesn't seem to be happening. So that's basically uh, my issue. A couple of issues is first is the Trojan horse, that this is sold to us as an open platform. Anyone can join, but at the end of the day, they will close the doors for anything else, and then we are basically stuck with this. And if you're holding altcoins in 2026 and onwards, then you might be in for a rude awakening. I don't know if this will succeed or not. I hope it will not, because this is also quite limiting. And I know many whales and people in crypto, they don't want to see a centralized future as well. They would rather see a decentralized future. So I could see some form of competition here as well. But anyway, let's continue. They say that as we remain committed to open source development, the core software for Arc will be released under a permissive license. So this means that if you want to build on Arc, you have to get a license. So it's not open, even though they say open source and we want transparency, and uh, our belief is in permissionless innovation, but you still need to have a permissive license to deal with us. So it's completely centralized platform. What can you build on Arc? Cross-border payments and payouts, stablecoin, foreign exchange, perpetuals, on-chain credit with off-chain trust. Off-chain trust basically just means government control. Capital market settlements and tokenized collateral, agentic commerce, and programmatic payments. Then this was interesting. Purpose built, not general purpose. So that means uh, this is supposedly a specialized chain, so it would not have general execution capabilities, same as, for example, uh, Ethereum. You can basically build anything on Ethereum that you can think of, but here you need to have a permission, obviously, like we talked about, and then they are focused on stablecoin finance use cases. Open and composable by default, enterprise ready. Arc is open to all developers. Anyone can build, transact, integrate, and contribute to the Arc ecosystem as long as you have a license. Market neutral and multi-chain aligned, Arc strengthens the broader multi-chain ecosystem by unlocking new use cases, partners, and institutional liquidity on-chain. But again, like I said, sure, they unlock some new liquidity, but they also suck liquidity from other areas of crypto. So I'm not seeing this as a bullish blockchain as a whole. Circle remains committed to growing USDC, connecting Arc to stablecoin apps on those blockchains. So again, it just seems like if you connect Arc to other blockchains, then they really just want to suck the liquidity out of other blockchains. So it's like a vampire attack. Built to coordinate, not control. So they specifically try to uh, deny that they want to control, but in every like second sentence they're like, but we actually do want to control. Arc aligns partners across fintech, PSPs, banks, enterprises, and stablecoin issuers to achieve something bigger than the sum of their parts. It's not a wallet garden, it's an open infrastructure layer to usher in a new era of stablecoin finance. Trusted infrastructure end to end, supposed transparency and trust. Get ready to build on Arc. Private testnet is coming in within weeks, so it's probably out already when I'm making this video, because this came out in August already, this blog post. But mainnet beta will be out in 2026, and then you can visit this website arc.network to request early access. So again, just my overall understanding of this is that the digital euro might be built on top of this blockchain here. The digital euro could be built on something else, but it could be basically built on this as well. But once this is out, I believe countries will start blocking access to other areas, because they don't want people to get rich. They don't want people to have money in decentralized finance. They want to control every single aspect of finance. And that way, they can basically force people to buy their debt products. So you cannot get yield. Otherwise, you have to use their own country's system. So you have to basically buy the government debt. That's the idea of governments and why they want to control finance. So if you have competing investment vehicles to government bonds, then that's bad. Countries don't want that. So they will try to block everything else. So that's basically my short analysis of this, is that it could become great, but I just see so many red flags all across the board here, and this allows a massive Trojan horse into crypto. Once you unlock USDC gas fees, then what's the point of holding Ethereum if you basically, as an institution, have access to similar platforms, but all of them are basically controlled? If anything bad happens, you can simply call Circle and they will fix the situation for you. So you don't have to worry about making a mistake on the blockchain. They can reverse it, revert the change back, or if there's a hack, they can revert the hack, and so on and so forth. So centralized blockchain 2026, that's what's coming. Let me know in the comments what you think of this, if you see any of the same red flags that I see, or if you see some potential good thing out of this. But just as a final note, I do want to mention that if they do allow access for people to build on top of this chain here, then it might actually be beneficial to now request an early access and get in on the action, and basically try to farm the potential airdrop, for example, or I don't know if there's going to be anything like this on the centralized exchange, centralized blockchain, but there might be an opportunity here if you are early. But that's basically my final note. Thanks for watching this video. If you like this kind of content, make sure to like, subscribe, and I will see you on the next video. Bye bye.